Ms. Boxtra, who are you calling first? Mr. Cooper or Mr. Phelps?
Cooper.
Mr. Cooper, yeah.
Okay.
Riley, what changes we make to the updated schedule? The issues we settled.
Oh, what changed? You guys had pointed out some of them were net, some of them were gross. So I went ahead and changed the net ones back to the way they were. The gross ones left them like they were. And, changed the, corrected the,
Let's all come to order and go on the record. Today is August 5th. This is day 4 of the Spire General Rate Case hearing, which is file number GR-2021-0108. Again, we are having a hybrid hearing. We have many participants and counsel in person in the Commission's courtroom, room 310 in the Governor Office Building. We also have participants and witnesses on WebEx, which is an internet telecommunications and video conferencing system. And we also have people listening in on the internet live stream. The parties have notified the Commission that they have addressed all of the issues for today except for the NOL, and that's net operating loss carry forward. There will also be some leftover questions that are related from yesterday regarding cash working capital. That's issue 8. The NOL carry forward, again, net operating loss, is issue 16. We'll begin with many opening statements, and I invite Spire to the podium. Mr. Carroll.
Good morning. Is this on? Good morning, Judge, and thank you. This is Frank Carroll appearing on behalf of Spire. May it please the Commission, Spire's position with regards to the net operating losses, or NOLs as they're referred to, is that the Commission should include net operating loss carry forward, also known as the NOLs, as an offset to accumulated deferred income tax, commonly referred to as ADIT. Spire has claimed the tax benefits from accelerated depreciation, including bonus depreciation, on its tax returns to the extent that depreciation was available, such that it will produce a net operating loss carryover. On its regulatory books of accounts, Spire normalizes the difference between regulatory depreciation and tax depreciation. This means that where accelerated depreciation reduces taxable income, the taxes that a taxpayer would have paid if regulatory depreciation instead of accelerated tax depreciation were claimed constitute cost-free capital to Spire. To normalize these differences, Spire maintains a reserve account showing the amount of tax liability that is deferred as a result of the accelerated depreciation. This reserve is the ADIT amount. In addition, Spire maintains an offsetting series of entries, a deferred tax asset and a deferred tax expense that reflect that portion of those tax losses which, while due to accelerated depreciation, did not actually defer tax because of the existence of a carry forward of net operating losses. In calculating its rate base, Spire included its ADIT balance as an offset to the rate base. Spire maintains that the ADIT balance should be reduced by the amounts that Spire calculates where it did not actually defer the tax due to the presence of the NOLs as represented in the deferred tax asset account. As you will hear from Spire's tax director, Chuck Cooper, and PricewaterhouseCoopers managing director, who's online by WebEx, Alan Felsenthal, this is a common accounting step for public utilities that has been blessed in a number of IRS private letter rulings, which you'll hear as referenced as PLRs. Of note, the IRS states in nearly all of these rulings that failing to include the NOLs would result in a normalization violation under IRC sections 168 in paren little I 9 in Treasury Regulation section 1.167 in paren little I -1. Importantly, staff agrees with Spire's position and stated in their position statement that it is appropriate to include the NOL asset as an offset to total ADIT and excess ADIT because it represents a tax benefit Spire has not yet realized. OPC opposes inclusion of the NOL because OPC concludes that NOL is a form of free cash in order to Spire. OPC does acknowledge that the IRS usually advises that NOLs be included as offsets to ADIT, but argues that the Commission is not obligated to include the NOLs in the rate base, ignoring the conclusions in IRS rulings that the NOL must offset the ADIT or a normalization violation will occur. OPC's position is that the Commission should break with foundational IRS practices for treating NOLs simply because it is theoretically conceivable that the Commission can do so, and apparently because OPC disagrees with the practice. But OPC does not make any persuasive arguments as to why current circumstances support a break with traditional accounting practices, either by distinguishing Spire from the PLRs favoring Spire's position or by citing to a more contemporary or persuasive solution to how Spire should include NOLs in its rate-based calculations. Further, the Commission must recognize that the IRS has normalization rules that must be followed in order for the taxpayer, in this case Spire, to be able to claim accelerated depreciation for income tax purposes. Violation of those rules would mean that Spire cannot claim accelerated depreciation, which, because there would no longer be book tax depreciation differences, would result in no rate base reducing ADIT in the future, thereby increasing rate base and revenue requirements. As mentioned, when the IRS has been asked whether not including an NOL ADIT asset in rate base would result in a normalization violation, the IRS has consistently ruled a normalization violation would occur in such circumstances. Spire asked the Commission to follow IRS protocol and include the NOL as an offset in rate-based calculations and to deny OPC's suggestion that the Commission break with the protocol. The loss of rate base reducing ADIT and increasing revenue requirements due to a normalization violation is too great a risk to take. Thank you.
Mr. Carroll, I do have a question before you go. Are you familiar with a recent Western District Court of Appeals decision on this issue?
If you're referring to the Missouri American Water case?
Yes, I am.
I read that decision. I didn't know that that was really applicable to this case and then involved a hypothetical ISRIS claim. I don't know that it was actually on point.
Okay. All right, thank you very much.
We can address that in our brief too, if you'd like. Okay.
All righty, thanks. We go to staff. Ms. Myers.
May it please the Commission. Good morning. My name is Jamie Myers, and I'm here representing the staff of the Missouri Public Service Commission. Staff's position on this issue is straightforward. Staff acknowledges that Spire has a net operating loss asset and recommends that Spire's net operating loss asset balance should be included in Spire's accumulated deferred income taxes, sometimes referred to as ADIT, and Spire's excess ADIT. Staff's calculated ADIT balance represents the accumulated cash consequences of tax benefits Spire has realized from book tax timing differences. Since this net operating loss asset represents a tax benefit, as counsel for Spire just noted, that Spire has not yet realized, it is appropriate to include this tax asset as an offset to Spire's total ADIT and excess ADIT. Staff witness Matthew Young has written rebuttal and rebuttal testimonies on staff's recommendations regarding NOL carry forward and is here today to answer questions on this topic. Additionally, I'll note, following the judge's instructions during yesterday's portion of this evidentiary hearing, staff also has witness Antonia Nieto available here today to answer further questions on cash working capital, should there be any. Thank you.
Thank you, Counselor. I would like to also ask you the same question. Are you familiar with the District Court of Appeals?
I am familiar. I think similar to the statements of Spire's counsel, Mr. Carroll, that's probably something we would address in brief and not necessarily on point to this specific issue.
Okay, thank you very much.
Thank you.
And we go to Mr. Kleiser, Office of the Public Counsel.
No, go right ahead. No more plans.
Good morning. To please the Commission, John Kleiser on behalf of the Office of Public Counsel. So the central problem with this issue lies in the fact that there are two buckets of free money at play here. And company and staff only want to focus on one, ADIT. And they're completely ignoring the other bucket of free money, which is the whole basis of the OPC's argument. Now, I'm going to coin a term today to refer to that second bucket. But before I get into that, let's break things down a little bit, make it a little bit more simple, right? So let's start with, what is the accumulated deferred income tax? As you've already heard, the IRS allows for companies to book depreciation different than how it's booked for accounting purposes in the regulatory world. That book tax timing difference, as we refer to it, allows for a certain amount of taxes to be collected from ratepayers, but not immediately paid to the IRS. It gets deferred. And these deferred taxes are booked to an account where they accumulate. And thus you have accumulated deferred income tax, or ADIT. Okay, but what about the other taxes, right? ADIT, or the accumulated deferred income taxes, doesn't account for all the income tax that's built into a company's rate case. right? Let's say that a company has, I don't know, staff calculates they're gonna have to pay $50 million in taxes. The deferred income taxes related to that book tax timing difference, let's say that's 10 million of it. The company is still gonna have to pay the other 40 million, right? Except, what happens if the company has other deductions that allow them to not pay that other 40 mil? Well, that is another pile of free money. And it's not something that anybody else really refers to by a good name. I'm going to give it a name for this purpose, and I'm going to refer to it as the permanent deferred income taxes. Why did I use the word permanent? Because unlike accumulated deferred income taxes, which eventually have to be paid, permanent deferred income taxes represent the income tax expense that the company collects from ratepayers and then never pays to the IRS. It's just a huge pile of free money the company gets to keep. The OPC's argument, in a nutshell, is that the NOL should be offset against this PDIT before you offset it against the ADIT. In other words, you should offset it against the free money that's being generated because the company has income tax that's collected and not remitted, before you offset it against the free money that's generated because the company has these book tax timing differences. Now I want to pause for a moment here, and I want you to think. I really just need to stop and think about the logic of ADIT. Why is it included in rate base? At a fundamental level, why is this included in rate base? ADIT is referred to as an interest-free loan. It's a loan from the IRS to the utility paid for by ratepayers. Let's walk through that really quick. The ratepayer pays money for income taxes. The IRS says, you can hold on to that money for a moment, we'll take it later. The company gets to hold on to it, pays it later, and in the meantime, it reduces rate base. Now, what about the permanent deferred income taxes I referred to? The logic here is the exact same. The ratepayers pay for it, then the IRS says, nope, you have other deductions, we won't take it, and the company gets to keep it. In fact, it's even better than ADIT because it's not just a loan, it's a gift. The government is giving the company money. So, again, all the OPC is asking for is to say, Commission, look, you want to acknowledge that NOL? Great. Acknowledge against the PDIT, and when the PDIT is used up, then acknowledge against the ADIT. Now, you heard a lot of stuff about private letter rulings, and they basically said that, you know, the IRS has spoken on this. It has to be done this way. Not true. There is an IRS private letter ruling that supports the OPC's position. And what this is really important is that the normalization rules just say that the Commission has to account for the NOL. It doesn't say it has to be used to offset ADIT. It has to be accounted for, which is exactly what the OPC is requesting. We're asking for you to account for it by reducing PDIT, which otherwise isn't being tracked. And this is exceptionally important, we have an alternative request for the Commission. You heard Counsel for Spire stand up here and say, the risk is too great. You have to offset the ADIT. And if you believe that true, go to the OPC's alternative request, which is, very simply, track the PDIT. If you're not going to offset the PDIT by the NOL, just track it. Just create a regulatory tracking mechanism that tracks the amount of income tax expense that's built into rates but not remitted to the IRS. The great part about this is that the Commission's own staff, while they disagreed with the OPC on our position regarding the NOL and the offset of ADIT, the Commission's own staff says that the appropriate mechanism for dealing with this issue is to create that tracker. So there you have it. The OPC is asking for you to not offset ADIT by the NOL because there's a huge pile of free money in the form of PDIT. If you disagree with that, order a tracker for the PDIT. Any questions?
Mr. Kleiser, I have the same question as I did for the other council. Are you familiar with that Western District appeal? I believe that you are.
I am intimately familiar with the appeal. I'm going to give you an answer that might actually shock you, which is that on the forefront, I actually agree that it's probably not completely relevant to this point. I would have to go back and do additional legal research to see if there is any particular relevancy. However, the specific nuances of the ISRIS case, I think, are distinct from the arguments that are being raised here. I can't vouch for that with certainty. I would want to do my own legal research, but that case is not what we are standing on. What we are standing on is the very real fact that this company is collecting money from customers to pay income taxes that they aren't paying, and that collected money needs to be recognized. There is no logical distinction between the PDIT that I refer to and the ADIT the Commission already recognizes. There's none. They both represent money that is collected, not paid, and which should be used as an offset to rate base. I literally, just think that, just stop and think. What is the difference between this? The only real difference is that ADIT you have to pay back eventually. PDIT you never have to pay back. That's better for the company.
That's where I'm stuck.
Yeah.
You keep saying never, and I can't wrap my head around such an absolute.
Okay.
But I think that will get cleared up because I did ask about the $40 million bucket of taxes that I believe were testified to or collected each year. And that is going to be a follow-up question for today's witnesses.
It'll be brought up during the, yes. Yes.
Okay. I do have to say I was not expecting all council to agree that the Western District decision wasn't relevant here.
Subject to check, my honest opinion, that is not what I was basing my argument on.
Okay. I'll leave that to you guys, and we'll go from there. Thank you, Mr. Kleiser. That's all the questions I have. Mr. Cooper.
Turn the camera so it faces the witness.
I'm sorry. Yeah. Upgrades to the system have already been discussed. I thank everyone for their patience, both online and on the WebEx. Everyone here in the courtroom saw all the technical changes that were happening. It does take just a minute. Mr. Cooper, thank you for your patience. Would you please raise your right hand? Do you solemnly swear or affirm that the testimony you give in this hearing will be the truth?
Yes.
Thank you, sir. Please state and spell your name for the court reporter.
All right. My name is Charles J. Cooper, C-H-A-R-L-E-S, J-K-U-P-E-R.
Thank you, and Spire's witness.
Thank you, Judge. Before we get started with Mr. Cooper, I'd like to make a proffer to the judge in mark an exhibit, if you would. In Mr. Cooper's rebuttal testimony, he cites 7 private letter rulings. That's on page 3 of his rebuttal testimony. Again, it starts on line 3 and rolls down to line 10. And what I'd like to do is have that marked as exhibit number 51 for ease of reference to the commission and the parties. Is it 50 or 51?
50 is the next number.
It'd be number
Okay.
50 then. I'm going to hand a copy to council. And Judge, would you like a copy? Okay.
Yeah, just if you can, email it to me, I'll take care of getting it all filed as an exhibit. For the other council's, edification, the commission was going to be asking for a copy of these PLRs to be filed as an exhibit. So I didn't hear you move for that. Let's get through the testimony and then we'll get there.
Okay.
Sorry about that. Go ahead, Mr. Carroll.
Thanks. You've already stated your name for the record, Mr. Cooper. What's your business address, please?
It's 700 Market Street, St. Louis, Missouri.
And by whom are you employed and in what capacity?
Employed by Spire as their director of tax.
Are you the same Charles J. Cooper who caused to be filed direct, rebuttal, and surrebuttal testimony in this proceeding on December 11, 2020, March 12, 2021, and July 14, 2021, respectively?
I believe those dates are accurate, yes.
Do you have any additions or corrections to make to your testimony at this time?
No, I do not.
If I were to ask you the same questions again today, would your answers remain the same?
Yes.
And are those answers true and correct to the best of your knowledge?
To the best of my knowledge, yes.
Thank you. I move to the commission enter all of Mr. Cooper's testimony into the record as exhibits 18, 19, and 20.
Any objections to the admission of exhibits 18, 19, and 20? Hearing none, so admitted.
And I'd also move for the admission of what's just been marked and identified as exhibit number 50, the 7 PLRs that were referenced in Mr. Cooper's surrebuttal testimony.
Before I ask or for any objections, there are 4 from Mr. Felsenthal's testimony that I also want to make sure are covered.
Okay.
Just for,
They may be
They're not.
included in the 7, but I haven't looked, I'd have to go back and.
I'll give you the last 3 numbers of those 4 cases, just for ease of identification: 739, 037, 021, 001, and this is Mr. Felsenthal's rebuttal testimony, page 11.
Your Honor, as this is going to be a group exhibit, we will make sure to supplement all of the PLRs before we file it with Your Honor.
That's where I was headed. I didn't know if we wanted to do just one, or if they were already in those. If it's easiest to do one, let's do one, and
Add it to exhibit number 50 then?
are they already in there?
No, we'll make sure that.
There's one that we'll need to add, Your Honor.
I hate to ask for any objections in advance.
We don't have any objections, and we're fine with the supplementing it to the private letter rulings that are available.
Okay.
Online there.
And I see head nodding by staff's counsel. Thank you. Please, end of business tomorrow. Thank you. Where are we at? Oh, you're offering exhibit 50. We're gonna, exhibit 50 is admitted onto the record without objection.
Thank you. And at this point, I would tender Mr. Cooper for cross-examination.
Mr. Cooper, I believe your first cross is from Counselor Myers.
No questions, Judge.
The attorneys are consulting for everyone on the live stream or on WebEx. Mr. Kleiser, your witness.
Good morning, Mr. Cooper.
Good morning.
Just to kick off, I know you said for Spire, I want to make sure it's clear. Spire, Missouri or Spire, Inc.?
Well, I'm an employee of Spire Inc., and through the operation of, I guess, the cost-sharing arrangement, I provide services for all entities in the Spire companies.
Okay, the reason I asked was because, and make sure I get this right, Spire Inc. files a consolidated tax return, right?
Correct.
And you would agree with me that Spire Inc. hasn't paid income taxes to the federal government over the last 4 years, correct?
That would be a correct statement.
Do you know the amount of NOLC Spire Inc. currently has?
The amount of NOLC that Spire Inc. as the consolidated group has?
The carry forward, yeah.
It's based on the filing of our fiscal 20 tax return. That NOL balance is in excess of $760 million.
All right, thank you. No further questions.
Thank you, Mr. Kleiser. I would like to take a pause for just a second and state, for the record, I have seen all 5 commissioners in attendance, either on the WebEx or listening. And I would like to also note it is *6 if you're on a telephone and you need to unmute. At this time, we'll turn to commissioner questions. Are there any commissioner questions for Witness Cooper?
No questions
Okay.
at this time, Jeff.
Thank you, Commissioner Holzman. Mr. Cooper, when rates are being set for a utility, as in this case, what is the calculation based on how many years of income tax payments goes into the rate calculation?
It's my understanding that the rate calculation is based upon a test year, and therefore, whatever the cost of service components that make up that test year, of which income taxes are a component of that, produces a revenue requirement that is put in place. And that income tax component of the cost of service is essentially based on the book depreciation or the regulatory depreciation calculation that is applicable under the normalization rules.
As Mr. Kleiser pointed out, and you just testified, you paid 0 during the test year. Is that correct?
We paid, current tax expense was 0, correct. Yeah, the amount of taxes based on the filing of the tax return produces accelerated tax depreciation benefits that essentially reduce the taxable income to 0 or really negative, and therefore there was no current tax expense, but the tax expense associated with the rates are basically hung up in the ADIT, it's a deferred tax liability that will be paid at some point in the future.
Okay. I heard you confirm that you did not pay taxes in the test year, and I have heard you testify that that is part of the calculation for how to figure out how much of the income taxes to include in rates or rate recovery. I apologize for my misuse of the industry jargon. How do you square the 2 truisms that we use the test year to set rates, and Spire didn't pay any taxes in the test year? I believe that is the sum of OPC's issue. Can you square how those two things would work together?
Oh, well, I'll give it my best opportunity, and hopefully it answers your question. So say, for instance, you know, in the test year, I think a number of, say, $40 million of tax expense has been you know, set. So therefore, if we didn't have any accelerated appreciation or any book tax differences that impacted the activities for the company, and we would just stick with the regulatory depreciation and have no other adjustments, then for that test year, the current tax liability would be the $40 million. Because of the availability of claiming accelerated depreciation, the additional depreciation deduction that you can claim on your tax return can reduce that tax liability down to zero or even make it negative. So therefore, in an example, say my accelerated depreciation, you know, produces a $50 million benefit. Well, I only have $40 million of what would be considered, you know, a tax expense based on the test year activities. So therefore, by having the deferred taxes of $50 million, my ADIT balance will increase, so that's going to be considered a rate-based offset. But if my ADIT balance is increasing by $50 million, but my tax expense in the test year was only $40 million, I'm out of balance by $10 million. And that's where this NOL offset comes into play, to keep you from having a normalization violation, which is essentially providing a benefit to the ratepayer sooner than the company would get that benefit. That NOL adjustment has to be adjusted out of ADIT, so the ADIT balance nets to only a $40 million increase for that test year period, which would then create the total tax expense per rate is listed as $40 million in this example. So that's going to be made up of two components, a current tax expense and a deferred tax expense. And if the current tax is zero, then the deferred tax is 40. I mean, it's basic math. And therefore, that $40 million, because it's a timing difference, will reverse at some point in the future. But as, you know, the utilities are capital intensive, they, you know, incur these capital projects on an annual basis, and that's something that's going to continue to have a deferred tax component. But bonus depreciation, which was prevalent through, you know, the early teens of, you know, this century, or this decade, you know, bonus depreciation is no longer in the law at the federal level. So the accelerated benefits of bonus depreciation are going to start to reverse over the next, you know, number of years. So that NOL that we have built up because of the federal policies allowing the bonus depreciation and the accelerated depreciation, that balance is going to start diminishing as we go forward in the future. So therefore, you know, those taxes will eventually be paid. You know, it's not that they're never going to be paid. And, you know, the concept of this permanent item, you know, I just really don't understand where OPC has come up with this permanent item, because there are very few limited amounts of permanent items that, you know, reflected in our tax return, but they're very insignificant to the overall, you know, calculation of our taxable income.
I think I can summarize your statements, your position, and I just want to see if you would agree with that. There is a timing difference that does create an interest-free loan as was the intent of that statute. And right now, Spire is in a good position for Spire financially. And it is what it is. And eventually, that will change, and Spire will have to start paying out of that bucket of accumulated deferred income taxes to the government. But in the meantime, it is a collection that is being remitted to Spire and is being held for an as yet undetermined amount of time. Would that be a fair, in plain language, summary?
I think it covers, you know, the majority of the concept.
Okay.
So, I mean, really where the distinction is if, you know, if I have a, you know, say with regulatory depreciation, I have a taxable income balance of, you know, say $40. And if my depreciation adjustment now creates a negative amount, you know, the only interest-free loan that I've gotten is up to the $40 because that's all the tax that was set in the rates for that test year. So anything above and beyond what taxes and rates has not been a benefit to the company as of that point in time, which is essentially the NOL carry forward. So once those NOL carry forwards are being utilized, then the company will get the benefit of that, and that's when it'll come as an adjustment to the ADIT offset that will, you know, keep everything harmonized.
I have picked on OPC's statement as being absolute. Their position is that Spire will never pay these taxes. You have disputed that. I have questioned the absolute nature of the word never. Could you give me an estimate of when you think Spire will be paying taxes again?
Well, that's a very difficult question, as OPC's, you know, question to me. I mean, from a consolidated basis, the consolidated group has an NOL, you know, in excess of about $760 million. Spire, Missouri, as a, you know.
Okay, I'm sorry to interrupt. We started saying numbers and it clicked in my head that it might be confidential. Your attorney says it's not. Please go ahead. I apologize.
Okay. I'm not sure if it's confidential. Our tax returns are confidential documents, but I know that we produce testimony in the case that I'm not sure if all of the DRs are noted as confidential or not.
He'll stand up and object.
Okay. So from a Spire, Missouri aspect, you know, their net operating loss carry forward is around, I think, $235 million of that total. So I guess, could you maybe repeat your question? When would we anticipate paying taxes? So you know, currently in Washington, there is some debate whether there's going to be an additional tax bill that comes through. And, you know, some of the terminology around what could potentially come to play is an increase in corporate tax rates. Who knows if they're going to make any other adjustments to certain deductions, the way you can compute depreciation, the way, you know, certain businesses can expense, you know, interest expense or any other type of expenditure, you know, that I think they're looking for revenue raisers from a tax perspective. So how those would impact, you know, future tax filings that we have, you know, is unknown at this point in time. I mean, given you know, the current level of the current level of NOLs that we have, and, you know, the projection for our, you know, future activities, I would say that, we probably will start whittling down the NOLs, but when we will ultimately utilize those, it could be, a number of years.
More than a decade?
Probably less than a decade, but probably more than a 2 to 3 year period. But it really just depends on, how tax policy changes, from this point forward. We can't project the future. We can only assess where we are today and then determine, how we need to, take tax positions on filings based on what the law says.
Your uncertainty leads me back to Mr. Kleiser's question. Why now? Spire's a large company. Why not just wait and you can come back and file a rate case or file an accounting authority order, or I'm sure there's a number of different mechanisms that the commission would be able to address a change in tax circumstances. It was before my time, but the 2017 Tax Cut and Jobs Act, I believe, did generate a number of filings in the commission for companies wanting to adjust how they approach their accounting, I guess, or taxes. So my question is, why now?
I guess, why now with regard to what specific question? The inclusion of a net operating loss carry forward as an offset to ADIT in the rate base. I mean, I think that's the core question, I believe, that we're here to discuss.
My question is, if Spire isn't paying income taxes in the test year, and the income taxes paid during the test year dictate what goes into rate recovery, why shouldn't the commission put in a zero for how much income taxes are being paid by Spire, because that's the answer for the test year, and then Spire can come back in 3 years or short of a decade or whatever time that your NOL position reverses, and then come to the commission and say, we've got to change, and we need to do this fix.
Well, because the way that the normalization rules are set up, the calculation of income tax expense in the rate year is based upon the book or the regulatory depreciation calculations. So that is a requirement to have income taxes recorded as part of your rate base, as part of your calculation of cost of service.
Is that whose requirement?
That is a regulatory, requirement that the calculation of income tax expense based on the cost of service calculation is part of the cost of service for that specific test period.
I need the citation.
I mean, I don't know, I guess, do we have a citation through?
Mr. Kleiser has something to offer. Let's see where that goes.
He's referring to normalization violation rules, which you asked about yesterday, and Mr. Riley pointed you to a citation of his testimony.
Thank you.
Ask if Spire would like to correct that statement.
Yeah, I don't know what.
Well, I mean, the normalization site was, I think, section 168.
Yeah, it's cited throughout our testimony as the
Okay.
citation of the IRC, and we'll make sure we get it to the judge's attention.
Not a problem. I got kind of laser focused right there and heard citing a rule, and well, I'm a lawyer, I don't know what the citation is. I apologize, I'll get the citation myself, not a problem.
Judge, for clarification purposes, it's all over the PLRs. Every single PLR references it over and over again, the normalization.
Thank you, and that actually brings me to what I believe is my last question. Let's talk about PLRs.
Sure.
I have a couple of PLR questions. First, are you aware at the end of every PLR it states that this is not to be used for precedent?
Correct, yes.
Okay. Second question, has Spire ever asked for a PLR on this issue?
They have not.
account?
We feel that it's something that we don't need to ask for because the PLRs that have been produced thus far, you know, the majority of those PLRs, based on the fact patterns that are listed there, you know, come to the conclusion that the NOL carry forward must be taken into account in the calculation of the ADIT rate base offset. And our interpretation of that taken into account means that you've got to offset the ADIT rate base or the ADIT offset with the NOL carry forward to keep yourself in balance with where the calculation of the taxes per the test year are based on the regulatory calculation of depreciation expense.
What about Mr. Kleiser's tracker? Wouldn't that account?
I think that it's already being accounted for through the ADIT offset. So as each year progresses, depending on what your ADIT offset versus what your NOL carry forward is, you know, those numbers are going to be adjusted essentially on an annual basis on a go-forward period. So that is going to essentially be part of the equation when we get to the next rate case, you know, we'll have an ADIT offset number and we'll have, you know, presumably still an NOL carry forward, or maybe that number will be down to zero. So I don't feel that, you know, a tracker would produce any benefit with respect to this.
Okay. That's all the questions I have. That triggers recross. Let's go back to staff, Counselor.
Yes, Judge, just a few. Mr. Cooper, are you aware of other Missouri utilities, in general, realizing that operating losses due to bonus depreciation?
I am not, I haven't looked into that.
Okay. But would you say that Spire's situation is unique in the utility industry with net operating losses and carry forward?
What
No.
portion of the bench questions is this recross directed to?
Judge, I think you asked quite a few questions about Spire's tax situation, when they would expect they would be ultimately paying taxes. I think that goes to this point, to the situation that Spire's in and its tax situation.
It does. I'm sorry, I did. And Mr. Kleiser, I think generally I would appreciate the extra education.
I don't know.
And so, Mr. Cooper, I'm sorry if you were cut off there. You do not believe that Spire's situation is unique in comparison to the other utility industry?
No, I do not. I mean, the utility industry is highly capitalized, so there's a lot of utilities that generate accumulated in bonus depreciation and are in an NOL position.
Thank you. No further questions, Judge.
Thank you. That goes back to Mr. Kleiser.
Your Honor, I believe that staff accounting schedules have been offered and accepted, correct? Can I please verify that?
The exhibits that you offered yesterday?
No, I believe that staff has offered its own accounting schedules in the testimony of,
Judge, we have pre-marked our accounting schedules as Exhibit 102. I don't believe that they have been offered or admitted.
No, ma'am.
the reason I ask this question is because I will be crossing him on a portion of those accounting schedules, and I don't want to burden the record with additional citations. So I'm going to hand these out, and like I did yesterday, assuming the accounting schedules come in, I will not need to mark this and offer it as an exhibit. Do you follow?
You're going to use it as a demonstrative for the time being?
I'm assuming the staff intends to offer its accounting schedules.
We do.
All right.
I'll hold her to it.
Thank you.
Okay.
question by the judge, to which you responded that you believe that $40 million that was not going to be collected from ratepayers, that was not going to be remitted, accounted for the book tax timing differences, the deferred taxes. Do you recall that response?
Yes.
Can you please look at line 45 of either of these schedules?
And no numbers yet.
These are not confidential.
These are not confidential.
Okay, number away.
Okay.
Do you agree with me that these numbers refer to the deferred taxes generated by the book tax timing difference that are included in staff's case?
I mean, this is a staff case, computation. I haven't had a chance to, validate. I mean, that's what's included in staff's case, would be different than what is filed on our tax returns.
Staff is not including $40 million of book tax timing difference. Would you agree with that?
I probably cannot assess that from this schedule. I mean, it just has a net deferred income tax adjustment.
Does that net deferred income tax adjustment add up to $40 million between these two companies?
I just have Spire West schedule in front of me. Based on the Spire West and East, the line 45 amounts, do not add up to 40 million.
I would proffer to you that if you round up, they add up to about 8 million together. Would you be willing to accept that?
Based on the staff schedule, I believe that would be an accurate statement.
And I would offer to you that at line 43, the total summary of current income tax from both of these, those would add up together for about 40 million, correct?
Which line item? Which line item?
Line item 43.
They seem, and I guess which column are you referencing?
Let's use E.
Column E. Yeah, they would sum up to approximately 40 million.
So is it fair to say that staff has included approximately 40 million in current income taxes and only approximately less than 8 million in deferred income taxes in this case?
Based on their schedule, that would seem to be how they have rolled up the tax number.
So staff is calculating that your deferred income taxes due to book tax time differences only accounts to about $8 million, correct?
That's what I guess the staff has put together, correct?
And the remaining $32 million would be current income tax expense the company would collect and expect to remit to the IRS under this schedule, correct?
Based on the calculation here, that would seem to be appropriate.
And if this schedule was ordered, would Spire remit that $32 million to the IRS?
It depends on how the company completes the filing of its tax return, because this is a regulatory calculation for purposes of setting rates. It's not the filing of a tax return.
Would the company make use of other deductions beyond book timing tax depreciation to lower its tax liability?
Sure, there are items that are not considered part of rate base that are timing differences that the company could avail itself of in the current year, with the reversal of those happening in a future year.
Mr. Cooper, you're not listening to my question. Are there deductions that are unrelated to timing differences that the company can take advantage of?
Unrelated to timing differences, yes, there are a few items that are considered permanent differences.
Is a net operating loss carry forward a deduction that the company can take to reduce its liability in a current year?
Potentially, if the current year taxable income is positive, then a NOL carry forward from a prior year can be utilized utilized to offset that taxable income, to the extent of the carryover, or if the carryover is fully extinguished, then there will be a remaining tax liability or taxable income left after the utilization of the NOL.
So, if staff had included $32 million in current income tax in Spire's rate, and Spire utilized a net operating loss carry forward to not pay that $32 million and reduce its tax to zero, that would be a possible outcome, correct?
That is a possible outcome.
Let's run down what would happen in that outcome. Let's assume that staff has included $32 million in current income tax in your rate, and $8 million of deferred income taxes. We don't have to, let's assume that staff has included $40 million of current income tax, of which $8 million is deferred. Let's set the $8 million aside. There's $32 million left over. The company is expected to pay to the IRS. All right? You follow me so far?
Mm-hmm. Yes.
The company utilizes a net operating loss carry forward to not pay that amount. How much money does the company have at hand at that point?
Are you talking from a cash basis standpoint or an accrual basis standpoint?
Either.
Well, from an accrual standpoint, if I'm utilizing an NOL, that means I am utilizing a deferred asset that will adjust where my net deferred tax balances are. So therefore, I essentially get to the same position because now my deferred balance, I utilize an asset, so my net liability from a deferred standpoint will increase by the amount of the NOL that I'm utilizing.
Maybe some visual aids would help. Let's go back to that example. The company, commission staff has included $40 million in your current income tax expense, of which $8 million is deferred. We remove that from this equation. You collect $32 million from ratepayers in a single given year. I'm going to hand you a $32 million bill. Take that from me. You utilize, or rather Spire utilizes a net operating loss carry forward to not pay income taxes. Do you still have $32 million of cash?
I would have $32 million of cash.
All right. And in the next year, if the same thing happens and I hand you an additional $32 million, over the course of 2 years, you've now made $64 million of cash.
I don't believe we've made $64 million of cash. We have an adjustment on our balance sheet where we have $64 million of cash, but then our deferred tax asset related to NOL carry forward would have been reduced by $64 million to get me back to a zero net position.
You have collected $64 million from ratepayers and have not remitted it to the IRS. You can agree with that statement.
Not currently, but that is something that will be paid to the IRS in the future.
At what point will it be paid?
That's an unknown at this point in time. I mean, tax laws can change based on the reversal of the depreciation differences, because a lot of the tax depreciation is set up, the bonus depreciation was taken immediately, whereas accelerated depreciation.
I'm sorry, I don't want to cut you off, but again, we're not talking about book tax timing differences. We're talking about deductions created by net operating loss carry forward. If you utilize a net operating loss carry forward in year one to reduce tax liability to zero, and you don't pay the $32 million you collected from customers, at what point is the IRS going to say, nope, you actually have to give us that $32 million?
That's the point I was trying to make. From a regulatory standpoint, assume that the book depreciation that's included in the rate calculation is a straight line depreciation of a 50-year life, which would say you're taking 2% depreciation a year for 50 years. For tax purposes, you may take that depreciation immediately on a bonus depreciation at 100% in year one. So you've taken that entire deduction for tax in year one, but the recovery through rates is going to be happening over the next 49 years to, at the end of the 50-year period, get back to a zero balance. So therefore, these NOL carryforwards that we have currently will reverse over time, and it may take up to 50 years to be able to do that. Under the current law, NOLs generated before 2017 have a 20-year carryforward period. NOLs generated after 2017 are unlimited.
You understand that the amount of money we're talking about is unrelated to book tax timing differences?
I'm not sure that's accurate because that's what generated the NOLs to begin with. If I have no book tax timing differences, then whatever my book income is going to be what my taxable income is. So if book income was negative in any given year, then I would have a net operating loss generated because I've got a book loss.
So you're saying that all current income tax is deferred?
I'm saying all current income taxes is deferred, that's correct.
So the staff should adjust its schedules to include all current income tax as deferred income tax?
I can't speak for staff.
Would it be correct for staff to adjust its schedule so that all current income tax is treated as deferred income tax?
Well, from a rate-making perspective, I don't believe staff is considering any accelerated appreciation or any tax method or elections that the company would make as part of their calculation of taxes.
But you would include all current income taxes as deferred income tax?
Well, I would look at the activity that we have for that respective year and determine if we are going to have a current tax liability or not. If we don't feel that we're going to have a current tax liability, we would classify it all as deferred tax.
Do you feel Expire is going to have a tax liability in the next year?
In the next year, the likelihood is remote that we would have a current tax payment.
So again, you would treat all current income tax as deferred income tax next year?
Correct.
No further recross.
Mr. Caro, redirect.
Give me a minute, please.
For everyone listening on the live stream and on WebEx, the lawyers are going to confer for just a moment. We'll be silent for just a second.
I was going to take this to the bank.
Thank you. Mr. Cooper, let's see if I understand. So you're not recommending the exclusion of the tax expense from rates, are you?
No, I'm not.
And why not?
That would be a normalization violation, because based on the cost of service, the income tax has to be a component, based on the regulatory calculation of depreciation.
And do Spire customers get the benefit of ADIT offset?
They do.
In what form?
It is a rate-based offset. And I think currently what we've provided through one of our data requests is that rate-based offset is approximately $400 million.
There's a reference to a PDIT, or a permanent deferred income tax. Is that a known regulatory or tax concept?
In the context of what was stated, it is really not. There are certain permanent adjustments between book and tax, but the majority of the items are time differences.
And that's not what we're talking about with NOLs here.
No. And the methodology that the IRS uses with respect to the NOL is really considered more like a with and without calculation. So you have these other adjustments that adjust your taxable income. And to the extent that the accelerated appreciation related to these method life differences increase or create an NOL, that is the component that we're really speaking about. So if I computed my calculation without bonus depreciation, if I have an NOL of 1 and I've got an NOL of 30 with accelerated appreciation, 29 of that would be related to what we're speaking.
Thank you. I have no further questions. Thank you.
Thank you. And Mr. Cooper, you are excused from the witness stand.
Correct. Thank you.
Thank you, sir.
While we have Mr. Cooper on the stand, are there any questions regarding cash working capital that we might have while we have him here?
Mr. Cooper, are you going to be in the room for the next hour?
Sure, I can be.
Okay. I will wait to hear if I have any other questions, and I believe that would be more than enough time to find out if I do. I do not have any questions at this moment. You are temporarily excused from the witness stand.
All right, thank you.
I believe next we're going to Mr. Felsenthal.
Yes.
Thank you. I'm going to come over and get the monitor prepared at the witness stand. And Mr. Felsenthal, if you can unmute yourself, we'll get started in just a minute.
Oh, somebody got it for me?
Yes.
All right, a quick announcement. Mr. Felsenthal will be testifying, and then I do intend to have a break before our final two witnesses for the day. Mr. Felsenthal, please raise your right hand. Do you solemnly swear or affirm that the testimony you give in this hearing will be the truth?
I do.
Thank you, sir. If you could please state and spell your name for the court reporter.
Sure. My name is Alan, A-L-A-N. Felsenthal, F as in Frank, E-L, S like Sam, E-N-T-H-A-L.
Spire's witness.
Thank you, Your Honor. Mr. Felsenthal, good morning. This is Frank Caro on behalf of Spire. Are you the same? Would you please state your name again and business address for the record?
Yes, my name is Alan Felsenthal. My business address is 1 North Wacker Drive, Chicago, Illinois, 60606.
And by whom are you employed and what is your title, sir?
I am a managing director at PricewaterhouseCoopers LLP.
And are you the same Alan Felsenthal that caused to be filed in this case direct testimony, rebuttal testimony
and sir rebuttal testimony.
Yes,
And do you have any additions, corrections, or deletions to make to your testimony at this time?
I have one correction, and it's on my rebuttal testimony, page 10, line 10. And I want to change the last word, which says expense, to payable. Change the word tax expense. It should be tax payable.
Are those the only changes is that the only change you have to your direct rebuttal and sir rebuttal testimony?
Yes,
And if I were to ask you the same questions that are in that direct rebuttal and sir rebuttal testimony, would your answers be the same today?
yes,
And are those answers true and correct to the best of your knowledge?
yes.
Thank you. At this time, I'd like to move the commission to enter all of Mr. Felsenthal's testimony into the record. They're listed as exhibits 10, 11, and 12 on the exhibit list.
You've heard the motion. Are there any objections? Hearing none, it is so admitted. Go ahead.
This time, I'd like to tender Mr. Felsenthal for cross-examination.
And counsel for staff.
Just a couple, Judge. Good morning, Mr. Felsenthal. My name is Jamie Myers with Staff Counsel. You referenced some PLRs in your testimony, is that correct? And by PLRs, I mean IRS private letter ruling.
Yes,
And so, even if a private letter ruling is not to be used as legal precedent, would a reasonable accountant read and rely on an IRS private letter ruling in advising a tax client?
yes, definitely. Let me just say that even though it says on each PLR that they are only applicable to the taxpayer who requested it, they publish these, they huddle in this, and before releasing them, it is the agency's interpretation of the regulations and the rules, IRS rules and regulations, and they are, if nothing else, instructive.
Thank you, Mr. Felsenthal. No further questions, Judge.
Thank you. And Mr. Kleiser.
No problem.
Thank you. Are there any commissioner questions for Mr. Felsenthal? Hearing none, I just have one, and I asked this earlier of Witness Cooper. To your knowledge, has Spire ever requested its own private letter ruling on this issue?
I do not know. I don't believe so, though.
Okay. That is all the question, that is the only question that I had, but that does mean we go back to recross examination. First we go to Ms. Myers.
No questions, Judge.
Thank you. Ms. Kleiser?
No question. Thank you.
Thank you. And redirect.
Just a minute. Mr. Felsenthal, just a couple questions related to the judge's question of you. Based on your knowledge and experience as the director in your firm, PricewaterhouseCoopers, and as a longstanding accountant in this, are you familiar with the process to get a private letter ruling?
Somewhat, yes.
And based on that, based on the private letter rulings that you've reviewed on this topic, what would you expect the IRC to rule regarding this issue?
Well, let me say a couple things. One, the process for a utility in obtaining a PLR involves several steps. The first being that the company summarizes what the issue is. They then have to have the regulatory agency agree that they've represented the correctly. So the company cannot just write the request in such a way as to bias it in their favor. It's got to be signed off by the commission itself that they agree that these are, in fact, the facts. On this issue, there has been one ruling that claims or that decided that not including the ADIT asset, the NOL asset in rate base was not a violation. And in that case is different than all the other ones, all the subsequent rulings. And if you look at that first ruling, what the commission did in that case is it permitted the company to record the entire amount of book tax difference as a deferred tax expense, have it recovered in rates without reducing that expense for the NOL, which is what happens in Spire's case and which is typically the case. So in that ruling, where the facts are different, the IRS said, because you've been able to monetize or realize the entire book tax depreciation difference, it is an interest-free loan, the whole amount, and does not have to be reduced by the NOL offset. In every ruling subsequent, and I urge the commission or the judge to take a look at those, it is very clear that while they use the words take into account, they must take into account the deferred tax NOL asset. They rule that that means they must reduce the deferred tax liability by that amount. It says so very clearly. The words take into account are in the regulations, which the letter ruling cites as, and those are the words, take into account. But then in the rulings themselves, the IRS says that if you do not reduce the book tax depreciation difference by the NOL offset, you don't offset it by the NOL, it's a clear violation. So I would expect that if Spire were to prepare a ruling, have it approved by the commission, send it in, I'd be surprised. Oh, you never know with the IRS. I'd be surprised if they were to get a different answer. The IRS has been very, very consistent that you must reduce rate base by only the amount of deferred taxes realized. And to the extent that there's an NOL, those amounts have not been realized.
Ms. Felsenthal, what would a normalization violation mean for the company?
If the company were to violate the normalization rules, they would be prohibited from claiming accelerated depreciation on the assets existing today or future additions. It's a severe penalty. What that would mean is, I believe there's approximately 190 or $200 million of ADIT, accumulated deferred income tax, related to book tax depreciation differences. That amount would, over time, be reduced. You would not be able to add to it because there would be no longer accelerated depreciation, and that the ratepayers would be no longer receive the rate base reducing effect of the 190 or $200 million that they currently receive.
And what impact would that have on Spire and Spire's customers?
Well, just doing a back of the envelope calculation, if there was no longer an interest-free source of funds, cost-free source of 190 or $200 million, taking 200 million times the rate of return, which is about 7-something%, that gets you to about 15 million effect on operating income. You would gross up the equity component for taxes. It'd be approximately $20 million negative impact on revenue requirements. The whole point of the normalization rules are to allow the utility to receive the same benefits of accelerated depreciation that all other entities do. So there's two parts to it, which are referred to in the testimony. You must compute your regulated tax expense based on assuming book depreciation is used for tax purposes. And then to the extent that you reduce your taxes because of accelerated depreciation, that provides cost-free capital to the utility, and that amount, the amount of the benefit, has to be used to reduce rate base. I have an example. Again, it's hard to discuss this with numbers without looking at something. At least I think so. And in my surrebuttal testimony on page 13, I have an example. And the example assumes only book tax difference is accelerated depreciation. And there's both a current and a deferred component of tax expense, but total tax expense in that example is based on book depreciation, like it has to be done. Current becomes negative, deferred becomes positive, and the total is the amount of the deferral that can be used to reduce rate base. Customers are getting a reduction in tax expense for the NOL. That's happening. Current taxes are reduced for the NOL. Deferred taxes are gross for the book tax difference. You net the two, and that becomes the net tax expense that customers are paying, which is, in this case, equal to the amount of deferral that the company will eventually pay.
Just one last question, Mr. Felsenthal. Would the company ever be able to defer income tax in the future if Spire is found to be in violation of the normalization?
They would not be permitted to claim accelerated depreciation from here on out on existing assets or on future additions. To the extent that there are other book tax differences that are not covered by the Internal Revenue Code, they can record those deferred taxes. But the lion's share of the deferred taxes result from accelerated depreciation, and those are the ones that are covered by the normalization rules and would be lost.
Thank you, Mr. Felsenthal.
Thank you, Mr. Felsenthal. You are dismissed from our virtual witness stand. We appreciate you joining today from your office in Chicago. The commission would like to recall Mr. Cooper.
By the way, thank you. Sorry I couldn't be with you.
Not a problem. Thank you, sir.
Bye.
And sir, I remind you, we've already sworn you in. That is still applicable. I have one question. we didn't specify. I'd like to ask about Missouri taxes. We talked about federal income taxes. Has Spire paid Missouri, income taxes?
They have not,
Okay, and over the test year period?
that's correct.
Okay. Are there does any council have any questions since I've reopened? No. Okay, I am seeing all head shakes. Thank you, Mr. Cooper, you are excused again from the witness stand.
Thank you.
I see it is 10:30, and I did state we would take a break. Let's go ahead and take that break, come back at 10:45. You want longer?
Can we push it till 11?
11 o'clock, going once, going twice. There's no objections. We will break until 11 a.m. 11 a.m. We are at recess and off the record.
stuff we need to do. Thank you.
He's out there, sorry. These are addition to 7. Where's Owen?
The hour of recess having expired, let's go back on the record. Again, this is a continuation of the Spire General Rate Case hearing. This is file number GR-2021-0108. This is Thursday, the fourth day of our evidentiary hearing. We are covering issue 16, NOL carry forward. We have heard from the first two witnesses, both of Spire, Mr. Cooper and Mr. Felsenthal. And now we are coming back for our last two witnesses of the day. First up, Mr. Young of Commission staff, please come to the witness table. Thank you, Mr. Young. You were already sworn in earlier in this evidentiary hearing, and that still applies. I will enter you for examination. Ms. Myers.
Thank you, Judge. And, Judge, if I may confirm that Mr. Young's rebuttal and surrebuttal testimonies, exhibits 125 and 140, have already been offered and admitted. My record shows they have. Okay.
I can confirm that.
Okay. I think, other than that, please just state your name for the record.
My name is Matthew Young, Y-O-U-N-G.
Thank you, Mr. Young, and I tender Mr. Young for cross-examination.
Thank you, and let's go to office.
The OPC is clearly further apart from the
Okay.
company on this issue, so company should have first cross.
Mr. Carey?
No objections here. Mr. Young, good morning.
Good morning.
Quick question to you. How has the NOL issue been handled in cases involving other Missouri utilities?
Similar to this one, the NOL asset, that's been included in the ADIT number and rate base.
Thank you. No questions.
Mr. Kaiser?
Good morning. Good morning. Were you in the room earlier when Mr. Felsenthal was testifying? Yes, I was. Mr. Felsenthal, I apologize to him, I'm going to trip over his name probably several times, testified that current income taxes are reduced for an NOL. Do you recall him saying that?
I need to have, I guess, make a definition. When I hear current income taxes, I think of the accrual accounting current income taxes. I think Mr. Felsenthal was talking about taxes payable, which is the tax return creation. Is that correct?
I have no idea what he was talking about. I just wanted to confirm that that's what he said. But it doesn't really matter. The record will reflect itself. I'm going to ask you directly, in your calculations, the current income taxes to be included in rates in this case, was there a reduction for net operating loss?
No, the net operating loss did not reduce current or deferred income tax expense that I included in this case.
Thank you. Mr. Felsenthal, try my best, also testified that the only difference between the one private letter ruling that said no normalization violation had occurred, and all the others, was the fact that in that one PLR, the deferred tax amount was included in the current income tax amount. Do you recall that?
Yes.
When you calculate the current income tax amount to be included in rate, is the deferred tax amount included in that amount?
No.
What I'm handing out, which I have not pre-marked, is a selection from the accounting schedule. As was discussed earlier, it's my understanding that staff intends to offer these into the record, so I'm not asking it to be marked.
Judge, if I may, Mr. Kleiser, how is this different than the demonstrative exhibit 102, right, I think what we're calling it?
Specifically, I've included Schedule 1 as well, which is what I'm going to testify on, not, what I'm going to question about.
So this is the Fire Missouri
Oh,
level versus exhibit 102 is broken out Fire East and Fire West.
no, you're absolutely correct, sorry. This is the top page of Schedule 11, which has the combined company, or has the company at a combined level versus broken out, which are subparts of Schedule 11. Again, that was all taken from staff's accounting schedule.
I just wanted to be clear when you said this was the same document as shared earlier.
Sorry, I did not mean that is what I said. What I meant to indicate was, again, I am going to be relying on the fact that you will be introducing the accounting schedules to not mark this exhibit. All right. So, turning to the second page, accounting schedule 11, which, as Ms. Myers, counsel for staff, has identified, is the combined company. Can you indicate for me what the number for total summary of current income tax at line 46 is under column E?
Quickly like to point out an error in the schedule. The state income tax rate of 6.25% should be 4%. I confirmed it is 4% in the East and West schedules. That said, the current income tax on line 46 for the test year is 27 million and approximately 40 million marked up for the revenue requirement.
Okay, so for column E, which is staff's preferred rate of return, it's 40,078,667.
Yes.
And if I turn to the back of the first page, accounting schedule 1, and I look at line 7, required current income tax, under C, which is that same percentage rate of return from column E on the other page, I see that it is the exact same number, correct?
That's correct.
And that number has not been reduced by the deferred income tax.
That number that $40 million number is calculated from the net income required, which of course comes from line 1, original cost rate base. That rate base number does have an offset for the NOL asset and deferred taxes.
Let's go back to the second page and confirm that the amount at line 47, deferred income taxes, is a negative $7,471,955 under column E.
That's correct.
That amount has not been added to the $40,078,667, which is included at line 46, column E of accounting schedule 11.
Correct.
And line 6, income tax requirement schedule C, or column C of schedule 1.
again, the deferred tax expense, would be included in line 4, net income available, which factors into line 7, required current income tax.
I'm sorry, you're saying it would be included in current income tax available? Line 8, is that what your argument is?
The deferred taxes, would not be, the deferred taxes flows to the net income available on line 4, which trickles down to the rest of the calculations.
So while the deferred tax is included in the net income available, it is not included in the calculation of the actual tax amount.
The actual tax amount, if you define that a little further.
At line 6 is the income tax requirement. The numbers computing the income tax requirement are the sum of 7, 8, and 9, correct?
So the income tax requirement is summed up on line 9. It is line 7 minus line 8.
Sorry, it's line 7 minus line 8 plus line 9 equals line 10. Is that correct?
No, line 7 minus line 8 equals line 9.
Ah, I see. And neither line 7 nor 8 include deferred income tax. Let me rephrase that. Neither line 7 nor line 8 have been reduced by deferred income taxes.
That's correct.
So the amount included to pay current income tax, the amount included to pay taxes which are being deferred is included in line 7 and 8.
You repeat that.
The amount necessary to pay the deferred income taxes is included in lines 7 and 8.
Yes, we include in the revenue requirement amount to pay deferred income taxes.
So the amount to pay deferred income taxes is included in the calculation of current income taxes.
Yes.
Thank you. All right. Were you in the room when I was discussing, when I was crossing Mr. Cooper?
Yes, it was.
Did you hear Mr. Cooper state the position that all current income taxes should be considered deferred income taxes?
Again, I have that twist on the definition. I would agree that all income tax payable that's produced by the tax returns should be counted as deferred income taxes.
Are you currently, in the calculation of these taxes, including all current income taxes as deferred income taxes?
No, that's not how the EMS schedule works.
That is not how the EMS schedule works, right?
That's right.
Let's turn back to that Schedule 11. What is the amount at line 48, deferred income taxes, meant to represent?
That is meant to represent the deferred income taxes that relate to accelerated depreciation.
So the tax book timing difference related depreciation, the amount that's put into ADIT, is represented on that line, 48 of this schedule.
I don't think the lines on this, line 48 of this schedule or any past schedules factor into how the company has booked their ADIT.
You would agree with me that that amount represents the book tax timing difference that creates ADIT?
With respect to accelerated depreciation, yes.
Yes. This is the deferred taxes which are accumulated in ADIT, correct?
No, this is our rate making deferred taxes. The ADIT, which is rate base, comes from the company's, balance sheet.
You would agree with me that the amount that's booked into this account is substantially less than the amount in the current income tax?
Yes.
Is it staff's understanding that the company has $40 million, roughly, in book tax timing depreciation differences, related to book tax timing depreciation related deferred taxes?
No, I don't think that's accurate.
Is it safe to say, based on this schedule, the staff has effectively calculated that the company would be paying somewhere in the range of $32 million in income tax after taking the book tax timing related depreciation differences into account?
For rate making purposes, that's the number we came up with after a select number of tax timing differences, including depreciation. Well, let me back up. After a select number of tax timing differences were flowed to the customers, with the exception of the accelerated depreciation on here, which is not flowed to the customers.
So the company, you are expecting the company to pay $32 million, roughly, to the IRS?
No.
And why not?
Because the federal government, when they set up the Internal Revenue Code through the United States Congress and maybe some rules promulgated by the IRS, they intended for these timing differences to create cash flows to companies so they could retain it and reinvest in the company.
So you expect that all deductions the company are going to take are related to book tax timing differences? Even though you've only included $8 million in this line?
Yes, that's just the timing difference that relates to accumulated depreciation. There are many other timing differences that are on Spire's tax returns.
Is Spire's net operating loss carry forward currently increasing or decreasing?
Increasing.
All right, thank you. No further cross.
Thank you, Mr. Kleiser. Again, I'll ask for commissioner questions, and a quick reminder to unmute yourself if you're on a phone. It's *6. Are there any commissioner questions for Staff Witness Young on net operating loss carry forward? I don't hear any. I do have a couple questions. Mr. Young, I found your exchange with Mr. Kleiser, I think, enlightening. I'm going to lay out what I believe I learned, and I want to ask you to either verify or tell me where my mistakes are, okay?
Okay.
This might be best if I just run through the whole list and then we'll come back and visit. I've jotted down some notes, so hopefully I won't get lost. The company, Spire, has, as round number, $7 million in book tax differences. We mark those down in the deferred income taxes column that Mr. Kleiser was talking about. Because of the book tax differences, that creates an overall net operating loss situation. That net operating loss situation means that the company pays no taxes. Every time they file for taxes, they say, IRS, we have all these deductions we haven't taken yet. IRS says, you're right, we'll balance out the numbers, but you don't owe us a check. In the meantime, there's $40 million coming in from customers that is not being paid to the IRS because of that net operating loss and those deductions. However, the taxes will be owed at some point in the future, because the taxes aren't officially owed or excused from being paid until Spire makes the tax filing. I'm sure there's an official word for it. So we have two wins for Spire. We have the congressionally enacted tax timing differences. The company gets use of the money in the interim until it has to pay. I would think about it as an escrow account in my rather uneducated manner. The second bonus win for Spire is that they're in net operating loss. So the way that the rules are set up, they're going to just keep that escrow money until they actually do finally have to pay taxes. Because they haven't filed their tax return yet, that is why the deferred income taxes only includes the book timing differences for whatever time period, while the $40 million continues to accrue. Period. Please correct where I'm wrong.
I'll do my best.
How wrong?
I agree with almost all of that.
Okay, good.
Except for the, the $7 million, the $8 million of deferred taxes only relates to the tax timing difference for depreciation. There are several, many, too many to list, tax timing differences that are not reflected in that $8 million. And you're right, the Spire collects money through rates for taxes they don't have to pay yet. You are correct. They will be paid in the future according to tax theory. The timing differences will reverse as long as they're temporary. The second win, the NOL, exists because when taxable income goes negative, the IRS isn't going to write a check to Spire. They're just going to say, keep track of it, and you can use that money in the future. Okay, it's the NOL asset isn't some additional advantage to Spire. It is just a record-keeping mechanism for tax deductions that aren't used. And so I guess, to take it one step further, the ADIT that we've put into rate base represents the amount of cash Spire has avoided paying IRS. The NOL asset is a critical component of that calculation. They're tied together.
Does Spire's filing of its tax return have any implication in this discussion?
No, we don't attempt to recreate the tax return. We,
I'm into timing. I had alluded to perhaps the reason that the $40 million isn't just simply accounted for in deferred income taxes. Is it because this year's tax return Spires hasn't been filed yet? So legally, we view the tax liability as still a possibility up until April 15th, or whenever corporate taxes get filed.
no, I don't think staff has any expectations.
Okay.
Right.
Then I'm hearing that there's two rules at odds. The IRS normalization rule that Spire and staff are saying we're following and we account for income taxes and put it into our formula. And we have a rule that says we figure out our rate of recovery based on expenses known and occurring during the test year. How do you square those two rules with the fact situation that Spire has not paid taxes in the test year? And I know that I didn't identify income versus some of the others, but for our purposes.
Okay. Well, I think it goes back to the government's intent to provide a cash flow for the company to reinvest in its operations, regulated and non-regulated. And so here at the rate-making level, to flow through all tax benefits to customers immediately would be to circumvent that concept. And so we choose to normalize a lot of temporary differences with the understanding that they will reverse over time.
Is this case unique in that all things washing out over time, A, includes a longer period of time than perhaps staff has experienced or seen before, or the commission has seen before, and a larger amount of money? Is that what makes this unique, or is this happening more and more due to the leftover impacts of the 2017 Tax Cut and Jobs Act?
Full disclosure, I haven't done a lot of research on the subject, but my initial reaction is that this is a common situation that started at least with bonus depreciation several years ago, and once that stopped, there is still accelerated depreciation Spire can claim, and it's doing a lot of capital investment, as we all know. As far as this case's uniqueness, since that the bonus depreciation has started generating net operating losses, this is not a unique situation, at least since that time.
I just want to restate what you just said. So the 2017 Tax Cut and Jobs Act, which gave businesses bonus or accelerated depreciation in order to achieve certain policy goals, which included economic development and use of that accelerated depreciation, that free loan fund to the company, that did generate economic activity on behalf of, for our purposes, utility companies. And some of those utility companies took advantage of that bonus and accelerated depreciation, so much so that they now have a large, I don't want to say accumulated, they have a large balance of, help me out.
Accumulated deferred income tax.
No, right, okay. So they have a large balance, and that is unique because of that 2017 Act.
I don't think the 2017 Act, created, and I'm sorry, you were going for a large balance of net operating loss carry forwards, I think. I don't think the 2017 Act is responsible for the balance of the NOLCs, because Spire has been generating an NOL since fiscal year 2014, I think. That was brought about by prior legislation creating bonus depreciation, maybe in 2011, 2012 timeframe.
That's all the questions I have. Thank you. Not excused yet, because I asked questions. We have recrossed. Somebody raise their hand, remind me where we're at. Thank you, Mr. Carroll.
I don't believe I have any questions, thank you.
Mr. Kleiser.
Thank you, Your Honor. When you started off, the judge was walking you through how he understood this. I think we came to a head. This, I believe, is the critical part to understanding our argument. The $40 million that the company is collecting in income taxes, is that amount being, is the aided reducing rate base being increased by dollar for dollar by that $40 million? No. No. There is an amount of money that is being collected by the company that is not being used to reduce rate base. Sorry, there's an amount of money collected by the company that is not paid to a taxing authority, which is also not being used to reduce rate base.
Correct. It is not paid to a taxing authority, and something else is used to reduce rate base.
So some part of the $40 million is not being put into aided.
I don't think that there's any link between the 40 million and aided.
The amount of money that the company is collecting but not remitting, that is supposed to be the interest-free loan that is the basis of aided. Is it not?
No, the 40 million, I mean, it's income tax expense collected from customers, but the aided we put in rate base comes from tax returns, which flows through to the balance sheet of the company.
And that $7.5 million, that reduces rate base because it's considered an interest-free loan, right?
Correct.
It's an interest-free loan because the IRS doesn't require the company to pay taxes immediately. It allows them to hold on to the tax money they collect from customers, correct?
Correct.
Okay. So the company is currently collecting $40 million. It's not remitting any of it. And there's some portion of that that isn't currently being tracked in any mechanism.
I would agree with you as representative of the money that goes into ADIT.
I don't know if that was the question I asked, so let me try this again.
Okay.
The company is currently collecting $40 million and not remitting all of it, not remitting any of it to the IRS.
Correct.
And some portion of that is not reducing rate base.
I guess I just don't follow the question. It's an expense, and
What happens to the $40 million the company collects and doesn't remit to the IRS? What does the company do with it?
it collects it as revenue, and I would be surprised if they earmark it for any specific purpose.
It's just cash to the company.
Correct.
So customers are currently paying $40 million in cash to the company.
Well, these accounting schedules have 40 million. I don't know what they're currently paying.
Fair enough.
Yeah.
If these accounting schedules are approved, the company would be just collecting $40 million in cash.
Correct.
And some amount would be reducing, well, somewhere, there's an amount of ADIT reducing rate base that's less than that 40 million.
See, I don't know how the 40 million is related to the ADIT rate base.
Is the amount of ADIT less than the 40 million?
No,
The amount of cumulative deferred income tax reducing rate base?
in rate base, we have, approximately 286 million, I believe.
ADIT being generated in this case. How much is that ADIT being increased in this case?
From when?
For the test period?
I don't remember the change in the ADIT balance during the test period.
Is the change in the ADIT balance test, is the change in the ADIT balance for the test period, the amount related to this case, is that greater or less than the 40 million?
I don't know what the change is, I don't know.
So you don't know how much staff is included in its case as a change for ADIT?
I do know, at a point in time, at December 31st, it was approximately $286 million, but $40 million is an annual expense. They're different things.
I'm asking about the amount that was increased for this, not the amount that was accumulated on their books. I'm asking about the amount of ADIT that was increased for this case.
Objection asked and answered several times.
Unless the answer is I don't know, it hasn't been answered.
I thought the answer was I don't know. Mr. Young, is that your answer?
That is my answer.
How does the $7.5 million included in deferred income tax on this schedule figure into ADIT?
Again, it's just a rate making number. It doesn't flow to ADIT on the books. It's the rate making, our schedules are not the basis of their accounting system.
All right, final question. Well, I shouldn't say that. If there is an amount of money which is included in rates to pay taxes that is not being remitted, that is not also being added to ADIT, is it possible to track that amount?
Prospectively, you could probably track the amount they collect from customers against, and compare that against the amount they pay to the IRS. But again, these schedules for rate making purposes are not relative or relevant to the tax returns.
Thank you. No further questions.
Redirect.
Thank you, Judge. Mr. Young, are you aware of other Missouri utilities in general realizing net operating losses due to bonus depreciation?
It's my understanding that nearly all of them had net operating losses from bonus depreciation. The large utilities, I should say.
And the judge asked you several questions about timing differences, and also about wins for Spire. Would the win for customers be the rate-based offset of ADIT?
That's correct. That gives the customers credit for funds they provided for taxes that don't get sent out from Spire.
And approximately what is the rate-based offset? Do you know?
In our direct case, I believe it was around $280 million.
And just roughly, at an 8% rate of return, would that benefit customers by $30 to $32 million per year?
Yes.
And again, you may have answered this question, but I still think it's worth trying to clarify. So Mr. Kleiser had asked you about the ADIT balance. Is ADIT measured at a point in time?
Yes, it is.
And tax expense, is that an annual amount?
That's correct.
Okay. And so, measuring ADIT at a specific point in time and measuring tax expense at an annual amount, is that the correct methodology for rate-making purposes?
It is, expense and rate base are two separate things.
Thank you, Mr. Young. I have no further questions, Judge.
Thank you, Mr. Young. You are excused from the witness stand. Would you please stick around for the next 30 minutes,
My pleasure.
just in case? Mr. Riley? And Mr. Riley, as I recall, you have already been sworn in. This is just to remind you that that is still applicable. And I can confirm that we have admitted exhibits 209, 210, 211 public and 211 confidential, the various testimonies of Mr. Riley. Mr. Kleiser, your witness.
I tender the witness withdrawn.
Counselor Myers?
No questions, Judge.
Mr. Carroll?
No questions.
Are there any commissioner questions? The judge has a question. Do you agree with Spire's position that at some point in time, they will have to pay taxes again? They will have taxes due?
Some point in time, they may pay taxes again, as Mr. Cooper pointed out, possible legislation and that sort of thing. However, at the rate of accumulation of net operating losses, they won't pay taxes in the near future.
The money technically belongs to the federal government. The 40 million that we've been discussing, it's their money. It's income tax money, and Spire is allowed to hold on to it until their tax return indicates otherwise.
All things being equal, the income tax expense built into the case represents an amount that should be owed to the U.S. government.
So why does the Office of the Public Counsel, what is its concern with money that belongs to the federal government? The federal government has said, okay, you can keep it for a while and we'll square up later. Can you tell me what the office's concern is?
Well, I won't necessarily agree that it is entirely going to be the U.S. government's money. It is earmarked as income tax expense. Now, my argument is that the IRS requires staff to calculate that income tax and include it in the case, and it's not being paid to the federal government. Some of it may never be paid to the federal government. we are looking into the future. I've just contended that if you're gonna include something like a net operating loss, but disregard the fact that income taxes are built into the case and not being paid, it may never be paid. They're certainly not gonna be paid in the near future. That somehow you need to offset that number, because that number is required by the IRS, that income tax expense, and it's not being paid.
Is this situation unique because of the length of time that Spire might be in an NOL situation? Or could it be unique due to the amount of dollars at issue?
It's unique. I mean, we wouldn't be having this argument if we didn't have a net operating loss. So if they were actually paying taxes, we're not gonna be here for this, but, so it's only unique because of the net operating loss. That answers your question.
Do you disagree with Mr. Young when he said, I think it was many, large utility companies would be this NOL position?
No, I don't disagree. The last time I, had looked at, Ameren, they may now, but, when I looked, they weren't including a net operating loss in their, in the calculations. KCPL, I've argued against their net operating loss back in 2018, and there is a small amount in Liberty. I haven't, they just filed a case, but I haven't checked on that, but, yeah, the large companies have net operating losses. I don't argue against the net operating loss itself. I only argue that there's things to take care of. I mean, as the argument goes, with a net operating loss, you don't get to fully, use of your interest-free money, and my argument is there is some money there that's not getting spent, called on by the IRS to be there. Not necessarily theirs, but it's called there to be there, and I think that should reflect against it.
Are you advocating for some type of a refund of the money to the customers or non-collection? Or are you advocating for an accounting treatment?
If I read you right there, I would be thinking an accounting treatment, because I would offset the NOL that is included in rate base, which is increasing rate base, and I would offset that, so it's really an accounting treatment.
I am not an accountant. That is not obvious. To slowly go one step further, Spire would still be collecting, but on their books, it would show a liability. It would show something on the other side to balance that so that it does not go into rate making. I'm out of my depth.
It's hard. Spire's books, are more likely completely different than what we're doing in rates, as Mr. Young pointed out, and I believe Mr. Cooper pointed out, that the income tax expense that we're arguing about is actually just revenue. It's an inclusion into rates. We call it income tax expense, and as far as I know, on their books, they're calling it just revenue, income. So, got lost track here. I don't remember the question so much now, but it's not necessarily rate making's not necessarily in line with their books.
Would you agree that they and the federal government are keeping track somewhere? That's not
Not
the
keeping
issue.
track of, not necessarily keeping track of how income tax expense is built into rates,
Okay,
but, you know,
that's the difference.
they are keeping track of
They're
how much
keeping
they
track
make.
on the tax side, and you're saying on the rate-making side, okay. I am, thank you, finished with my questions. That does trigger recross-examination. I believe we go first to Counselor Myers.
No questions, Judge, thank you.
Mr. Caro?
No questions.
Mr. Kleiser?
Thank you. I'm gonna try and do this in reverse order, the bench's questions. So let's start with that, accounting treatment. Just to reaffirm what you had said in response to Judge Byers, tax treatment is different than how things are handled in the rate-making world, right?
Yes, that's correct.
And that kind of helps explain a lot of the confusion we've heard today from various people.
Well, yes, and when discussing what they do on their income taxes and what we're doing on in rate making is turning out to be quite good.
The judge asked you about a question, well, I think it was actually more a statement than Mr. Young had said, about having raised this issue for other utilities. Do you recall that?
Yes. Yes, sir.
Have you raised this, I mean, you answered that you have raised this issue with other utilities, right?
Yes, sir. I filed testimony in the KCPL case, in fact, I think I filed this a number of times, but this is the only time I ever got to sit here and discuss it.
That was gonna be my next question. All the other cases you've raised this issue have settled or stipulated or something. This is the first time you've actually been able to present the argument, right?
It's hard for me, yes.
And let's be clear, an NOL, that's not unique to utilities, is it?
No, NOL is, as Mr. Young put it, it's a product of legislation to stimulate investment. And that runs true for most any company, especially companies that are capital intensive.
But your argument is based on the rate-making nature.
That's true, because what you have in rate making is a little different than what is going on in generally the private industry, is that rate making is the commission, when this is all settled, is gonna come up with, I tell you what, let me look at it this way. When the commission comes up with all the issues and everything, there is going to be an income amount set out for the company. Let's just call it $20. So the commission comes out and says, okay, Spire gets $20. That's their net income. That's what they, and then what the commission does after that is they say, staff, figure me up income tax expense on that $20. So let's just say, for the sake of argument, that they come up with $3. So we've got $20 in income, and they get to keep that $20, whereas they come up with income tax expense to go with that, to cover it, so that Spire is always made whole on their $20. So they got $3. Now, for sake of argument, $1 of this is going to be deferred income tax. They still got $2 sitting here that isn't getting spent, but they still get their profit, and they still get this $2. This we've earmarked for deferred income tax. It's an accrual that goes on. Now, with a company, say GE or somebody, if they make $20 and they owe taxes, it comes out of the $20. It doesn't come out of this $3. It comes out of here. They've got deferred taxes. They're built into the $20. That's their interest-free money. However, the interest-free money that I'm arguing about is the income tax built in over and above this, and it's right here. It's not getting spent to the federal government, but the IRS says you gotta compute it. So it's done. I mean, I don't take issue with the fact that the IRS has done that. It's just that I believe that this needs to be recognized against other IRS things like the net operating loss. So what we have is something over and above what other companies get to ever experience, because they only get the 20, whereas a rate making, and I'm not arguing with the rate making procedure either, it's just a fact that we got $3 and we got $20, and somewhere along the way, we have to recognize that $3, at least two of it, in my argument, $2 of it is interest-free money. It's just sitting out there, and it's out there every year.
And it's interest-free money that the money, company is collecting but not recording.
Exactly. It's not a rate-based item. It's an expense, and it occurs, it's set in rates every year, and it just goes down the line until Spire comes back in for another rate case, and they recompute the taxes. In this case, it's $40 million. We're gonna have $40 million this year, we'll have $40 million next year, and $40 million the year after that. It's $120 million sitting out there that nobody's, I mean, the ratepayer's not seeing income taxes paid off of it, but it's earmarked for income taxes. So it's, you know, it's free money. I mean, it's actually, you know, we call it deferred, and Mr. Cooper had mentioned it, and he I believe he said that current income taxes are all deferred. I believe they are too. That's my whole contention, is that this money is not necessarily going to pay taxes down the road. Certainly not going to pay them anytime soon.
So your position is the NOL should be be offset by that deferred income tax, the $2 in your example, and not the 8 if it's on the company's books.
Yes, that is an accurate statement.
And in the alternative, you would say, well, the commission should order the tracking of that $2.
Yes, they can do that. That's was brought up by Mr. Young, and it's certainly a viable option. I had not thought about it before, but if you do a tracker, I still believe that offsetting the NOL is the way to go. But if the commission thinks maybe a tracker is positioned, that brings up some interesting points, is that a tracker would probably not be under the IRS's decision-making in a private letter ruling. Trackers are trackers. So if you set something up for the $40 million for each year and put a tracker on that and make a decision down the road that it needs to offset rate base, it's probably not an IRS thing.
So tagging on to that, no risk of a normalization violation whatsoever if you go with the tracker.
That's my, that would be my understanding as to what the IRS usually does and what rate making usually does. Oh, I'm sorry.
Do you think there's a risk of a normalization violation if you just offset the NOL by the amount of deferred income taxes that you're referring to?
Well, it's interesting, and you know, when the phrase normalization violation's been mentioned here today, I almost feel like the lights ought to dim. It's just so scary. My gosh, we're going to have a normalization violation. We aren't going to have a normalization violation. Even if you take our argument and look at it and go, yes, we're going to offset that NOL with this extra money. Spire is going to go to the IRS and ask if it's okay. And I think it is, but if the IRS, you know, if you ever try to figure out the IRS, if they say it isn't, then they're going to come back here and the commission's going to change it. Even if they say it's a violation, you just fix it. Nobody is going to slap them on the hand and say, you don't get your accelerated depreciation anymore. They're just going to say, you need to fix that, and that's what will happen. The way I look at it, which I don't think the IRS has ever had the question posed to them, I don't think it's a violation. If, on the other hand, the commission goes ahead and does what I suggest, and the IRS comes back and says it's a violation, it'll just be changed. I mean, Spectre of Death is not gonna walk in and kill Spire Incorporated, it's just not gonna happen. It's not that, it's not a end-all thing if the decision is contradictory to what the IRS is.
I have no further redirect. Thank you.
Thank you. Mr. Riley, you are excused.
Sir. I need to be here for cash work cabinet.
I have asked, and we do not have any questions. We are winding down the hearing for Thursday. I note that it is 12:01. I intend to conclude Thursday's hearing in the next 2 minutes. So just a reminder, if anybody has some announcements. We will begin again tomorrow at 9 a.m. I have not heard further from any parties, so I will be preparing for 2 issues. The first.
Your Honor?
Yes, sir.
I believe we have reached an agreement, that would also resolve issue number 53, which is low-income issues.
Excellent.
My expectation is that a stipulation will be filed in the case this afternoon for the commission's consideration, leaving only issue 1, cost of capital, for tomorrow's schedule at 9 a.m.
Excellent. It seems everyone agrees.
One other issue, just for clarification purposes, Your Honor, regarding the exhibit number 50, which were the list of the PLRs, we'll also include the PLRs cited in Mr. Felsenthal's testimony, in addition to the 7 we mentioned. And I think that includes the ones you brought to our attention.
Excellent. Thank you.
Thank you.
We are in recess until tomorrow. Yes, ma'am.
Sorry, Judge, to delay. Quickly, staff exhibit 102, which has been referenced. If no party objects, staff could offer that to be omitted right now instead of waiting until tomorrow. So no mistakes are had.
We will take both questions at once. Does any party object to taking it out of order? And does any party object to it?
For the record, 102 would be the
Schedules.
It's the full staff accounting schedules, not just the,
right. I just want to make sure
Yeah,
that for the
full
record,
staff
it's the
accounting.
full staff account time schedule. Yes, I have no objection.
No objection.
all right.
It's unanimous. It is admitted onto the hearing record. We are in recess until tomorrow at 9 a.m. and we're off the record.
Thank you, Judge Hatcher.
Thanks, Commissioner. Thanks, all the commissioners.